Hey traders, in this video we're going to actually talk about a really cool strategy, how to trade this chart that you see, little tips and tricks, and how this can make you a whole bunch of money trading the S&P Emini futures. So let's get right into the video, but first this. Make sure you check out my website daytradingfearless.com for the S&P Emini weekly trade zones, where I give you charts and resistance support levels where the S&P future should reverse. As a added bonus, you also receive the 2-hour trade zone training video course, where I teach you how to draw the trade zones for yourself on any stock, future, or crypto market in this 4-part series, and how to trade them. So make sure you check out the links down below, and let's get right back to the video. Okay, so let's get into this video. What exactly are we looking at on this pretty much chart that we see, right? Well, let's go through it. This is first off, it's a 512 tick chart. We're looking at the S&P Emini futures, okay? And we actually have a double moving average line, okay, where as the line changes and the 8 and the 21 cross, it actually crosses over. It's two lines within one. That's why you only see one. But in reality, there are two lines that when the cross happens, it changes color from red to blue, right? And it's either you're above the red line, or sorry, the 8's above the 21, or vice versa. We then have a basic 200 EMA. We have a RVI modified. RVI stands for Relative Volume Index, which I think works best with a 512 tick chart. We have overbought areas that go from white to red, and oversold areas that go from white to turquoise. And also, as you could see, the candles actually change color too when you get way overbought or oversold, right? So we could see we're way oversold, and essentially whenever this gets below 5 down here or up above 95, it changes color, right? And so it's a really cool feature, because the reason for it is we're able to see divergences when they happen. So a good kind of here's a really good example, right? We get way oversold. We have a little bit of a bounce right here, and then we make new lows. But look, we're back to red, meaning that we actually have a divergent signal where the RVI is making a higher low on the RVI, but price has made a lower low, right? So here's our lower low there, and here's our higher low here. So this is a great chart for trading divergences and looking for potential reversal candles. You have to be patient on this chart for things to set up. Now, that's just one of the cool strategies you could trade with this chart. There's a couple other strategies that we could do, right? But first off is looking for divergences. Now, do you need this to go from red to green to white and then back to red? No. You could kind of see divergences. Let's see. Something like here, right? We actually have a divergence here and then down to here, right? So there's a divergence here with a reversal candle, right? A shooting star. And then look at what price does. It's a precursor. If you're able to identify this in real time, you could look for a potential short, right? You go, hey, that's a reversal candle. Look down, there's divergence here. As we made a new high, we made a lower high. And that is, you could say, hey, let me just get short on the break, or you could wait for what, if you've watched my other videos, I call the kickback, right? Where we kind of fall and then the next move back up, we look for a level to get short, so we minimize our risk. But the problem with that sometimes is exactly what's going on here, where I would be looking, if I saw this pattern, I'd be looking for a trade to get short here, right? To reduce my risk, not have to risk as much. But the downside is, look at this. We never got back there and it had a nice follow through to the downside, right? So that trade doesn't always work. You have to be okay with missing it, but just something to point out with what's going on. So another way we could trade this, and I like to call this trade by color, right? When it turns red, you go short. When it turns blue, you get long, right? But here's the trick to it. When it changes color, I don't like to get short right when it changes color, because sometimes you get little fake outs like this, right? What I'd rather do is wait for a fall, kind of where it changes from blue to red, right? We're now bearish. And then look for the first kickback to the moving average line, and then you could get short. Now, if you have a divergence, right, all these other factors, you could kind of take all those extra variables and say, hey, I know there was a divergence up there. We went from blue to red. We're now doing a kickback to the double moving average line. Hey, I really like this trade. Let me get short, looking for a bigger move, right? Or you could try and do a quick scalp. That's another way of trading it. But look at what this does, right? It breaks, comes back, and then it fails, right? Comes back, fails again, fail. Now, this is unique because it just kept kind of really weak, right? The market couldn't break above, but look at this on the way up, right? Every time it came back, you could maybe look to say, hey, let me buy here. If it turns red, get me out. And when they trend very well, right? So if you miss one, you can maybe look for pullback into the moving average line. So that's another way of doing it. Another way you could do all this too is come back over here and grab a Fibonacci extension, right? Just grab it, because we could see on the 512 tick chart, we could see patterns a lot easier, right? So we could see this is one big leg and then a big consolidation, right? So we'll just grab the Fibonacci. Probably we'll just use this entire leg right here, right? Because this is the lowest point of all of this price action. I'll just kind of highlight it. Right? All of this price action, this is the lowest point. Nice sideways kind of bear flag, right? Here's our flagpole, the flag, and then we break down, draw our Fibonacci extension, and you know I use the 127, 1618, and the 200. And look at this. As we break down, the buyers step in, get a bounce. Fail here, right to the 1618. So those are a couple different ways you could trade using this chart. What I'll do is I'll leave a link below in the description for this chart. So you can upload it to your own Thinkorswim, and now you have the same exact thing that I have. So I hope you guys like this video. Comment if there's other videos you want me to see down below. Let me know, and I'll try and make some for you. But if you kind of watch this chart over the next 6 months, you do a New Year's resolution, right? And say, I'm going to watch this chart for the next year. I guarantee you, within a couple months, you'll start to see patterns. And within a year, you'll be pretty good at understanding and creating your own strategy using this chart. So, again, hope this video helps. As always, thank you for watching my videos. And until next time, we'll talk to you soon.